Prices of basic commodities rose at the slowest pace in almost 2 years, with June inflation coming in slower than expected at 2.7%.
But with uncertainty in oil prices around the world and the rainy season coming, the question is, are we off the hook? Jester's been watching the data since it came out earlier this morning. Jess, what more can you tell us?
All right, here, Sean Charles. Well, economic managers may be right. After all, that pickup in May inflation may just be a one-off. Recall, of course, that May inflation was at 3.2%. Well, you have June CPI now easing to 2.7%, slower than the previous month, and even falling from that year-ago print of 5.2% in June 2018. That also beats estimate. You have, of course, Bloomberg in their estimate at 2.8%. At the same time, a survey by analysts from Business World also points June inflation at 2.9%. Now, if you try to take a look at how things are faring, you would see here, this is actually the slowest in nearly 2 years. That's from August 2017 when inflation was at 2.6%. Now, June output also puts our first half average at 3.4% within the BSP's 2 to 4% target range for the rest of the year. Now, dissecting the figures by region, it would show that Manila inflation was lower at 3% versus the 3.4% print in May, and also slower from that 5.8% posted in June of 2018. Now, looking at the areas outside NCR, inflation clocked in at 2.6%. Falling from previous month and a year ago. Mimaropa posting the highest inflation at 5.2%, experiencing in fact a markup from previous inflation in May at 4.7%. Region 9 or the Zamboanga Peninsula, on the other hand, had the lowest inflation at 0.7%.
All right, so is it still food that is a commodity group that is the most inflationary in the report? And what brought about the general deceleration, Jess?
Okay, looking at the gauges here, Sean, it would show that all indicators experienced either a slowdown or they were stable. Now, looking at food and non-alcoholic beverages, there was a markdown to 2.7%. Likewise with tobacco and alcoholic beverages at 9.3%. The other utilities, other expenditures, household expenditures also experienced a bit of a markdown here. However, going back to food and non-alcoholic items here, it would show that vegetables actually experienced a bit of a markdown here in terms of inflation at 9.5%. However, that is still relatively high, says the PSA. Other than that, rice inflation, still of course the heavyweight in the CPI basket, comprising around 9% of the total basket here. Already in the negative territory. The last time it was in that zone was way back in June 2016. Now that of course indicates a deceleration in rice prices. In fact, you have the PSA attributing that to the rice tariffication law. Other than that, you also have lower oil prices pushing down transport costs, which rose only 1.6% versus the 3.5% posted in May. Also, you have to consider Dubai crude oil prices were also lower. Now, there were also downward adjustments in electricity costs, which in turn slowed down utility component of the inflation. Sean?
Right, Jess, the BSP is saying that they're keeping a close watch on these developments. How will this latest figure impact monetary policy direction?
Well, first things first, you have Governor Ben Jokno of the BSP saying that the price gains for the month of June still pretty much within their target range of 2 to 4% for this year. And in 2020, they are saying that the BSP will continue to ensure that monetary policy stance remains consistent with the BSP's price stability objective while being supportive of economic growth. Recall, of course, that Ben Jokno did say that there's a lot of monetary policy space for easing. What we need to do at this stage really is to just be patient. Now, what are analysts saying? You have Juneri of BPI saying that they should provide room for one more interest rate cut and enough easing of RRR in 2019 and early 2020. You also have Yuben Paracuelas saying that rate cuts may actually happen as early as the next meeting in August. But Robert Dan Rosas is saying that the BSP will most likely still wait for the July CPI figures before considering a rate cut in August. However, just to conclude things here, you have the PSA saying they are expecting more easing of inflation in the coming months.